Welcome to TradeTheMBI.com. This is Jonas Reports for the 18th, Monday, January. Interesting way to say that. Well, and interestingly enough, we've been talking about a return back towards the ABM and just some of the general softness up here at the highs. We've not been able to see the DOC red here pop above zero, particularly when it came at this particular point, started to roll over. It held on pretty well, and we're still doing quite nicely. I think there's a recognition the market thinks that maybe some of the proposed Biden ideas and that may not necessarily have as easy a path given how divided the Congress, but that's actually going to be overall good for the markets in general. But you also have some additional factors with the virus and that laying in there that pose some challenges. And again, the shakeout, while it was improving, started to make a softening, and that's problematic when you're at highs like this. When you start making successively lower histograms, it can go on for a little while. So we'll continue to watch it. That's a clean DOC break right there in all aspects. And interestingly enough, we finally got the confirmation, because this is what had been changed relative to the S&P, was that the NASDAQ had been a much better shakeout, meaning the power within the algorithms was much more inclined towards bullish moves, and that started to break down on the midterm buyers fading as well as long-term. And it's been a soft one. It hasn't been dramatic, and that's why these moves, seem pretty large for a given day, but overall it's modest. And again, brings it right back to the ABM, kind of exactly what we've been looking for. We've been waiting to see that reversion right back to it. We've had it a couple of times, but we're still right in the middle of the range. And of course, the euro is also got its own problems. Plenty of difficulties taking place within there, and they may be forced to add into their stimulus as the talk, and so that would bring back to parity what the U.S. is proposing as well. So there's some doubt as to whether there's a belief that the U.S. will be able to actually get there. So we're just reverting back. I know we have the positive extreme right here that was filled right there. It's still going to have an attracting power. And it's relative to note because there's been a lot of headwinds discussed as far as economic situations, and that's keeping the lid on gold. Now, whew, look at that chart. And that's busy. I wanted to show the whole day because this is all stemming from back over here and the short move that started here. This happens to be the Power 2, DOC Power 2 cross. If we look at it from a pink bar standpoint, it's a little broad. Let's narrow that a little bit. You can see that extended from back before as well. So what was interesting is there were a couple of unique configurations that took place. While you ended up with relatively short readings, obviously look at this steel here. This is a no reset configuration for quite some time until, late in the day. Right over here before the steel finally dips below the zero. So at that particular point, I'm looking for these dips below zero that are corresponding to shakeout move. I mean, not shakeout, but orange DOC dipping below the red and green crossovers. And so you get a few of them in between, but they're modest in their view, particularly when they're coming at points after the no spark zone. That's -7 to -13 range, tends to be short-lived. And so at that particular point, I'm looking for, like I say, this DOC steel crossing below cyan, the orange spiking above, green below red, and ideally red starting to fade. That's usually the first one that really starts to get an idea that things are going to be a little bit softer, and we'll see that play out later on in the chart. Let me just go ahead and increase this so that we can get a clean view. And then literally, we went back and forth several times. We had a couple of points where we almost got the confirmation. You had your dip below the zero, the orange comes down but does not go below the red, and then red flattens out, and that rejection of the steel crossing below also happening at the same time as you get a spider, which is where the green crossed below and then immediately reverts back below, and that just led to a dive really pretty quickly at that particular point. The orange candle coming in at this particular point, when you have such a deep move in the minus 22, you expect a little bit of a bounce off that start of the orange, but on the power 2 cross, when you have steel at the excessive levels, it tends to be a little more conservative about that, so it looks for a secondary pivot, and that's why you see the delay between the two. In this particular case, you had a lower low on relatively matching red DOCs. This is a slightly lower pivot, which in this particular case, when you get that, I wasn't prepared to jump on that early enough. You had to wait, in my view, till the green cross is over and you're seeing that significant rise, particularly when red DOC gets back above the negative 13.5, then you've got a chance for that to continue. It still produced some of these classic sell signals within and then reproduced additional buys, so it got a little choppy there towards the midday part, but that did take off and brought all the way back up to the declining 100%. So, I mean, the ranges on this from both down and up, just phenomenal. I point out this one was an interesting buy configuration of the DOC sell. You're in that no spark zone, so I'm not expecting, again, a huge move. It was still pretty decent. Ended up, though, with positive extremes on it, pretty close after the buy configuration, so a little just above where the high of that single bar candle was. But you had the green crossing over, and you've got to expect that you're going to have some move, whether you take the long or just at least take advantage of the earlier short. Either one of those plays works. I mean, it's still, from a broad continuation on the long side, not bad. The ultimate breakdown comes, though. You ended up with a DOC spread over here, where you had the magenta, and that's still well above, and the rising gold. So not as exciting as the secondary move over here, where you get a DOC spread. You don't have the rising gold. You've also got a lower shakeout at relatively higher highs, and that one becomes a little bit more interesting. Did cave pretty quick, but you ended up with that inversion of the orange dipping below. Again, marked it also because, again, no spark zone right there, and very weak from a shakeout standpoint. And then when you ended up with, it's not a DOC spread, but that separation of the cyan to green, you also already had a rollover of the red. And that became very powerful from that standpoint. It's interesting because it still wants to fight, but that dip of the orange wasn't enough to cross below, and that led to the cascade that took us all the way down. Now, of course, a lot of these are previously marked positive extremes from before, and these algos just tend to love some of these. I mean, you can follow the markings. I mean, it's not a coincidence, and they're not related to the specific retrace values and that, other than where the algos have set up. But as they break, you move to the next one, and then boom, this all the way down at 3744 before it finally caught some support. So excellent action. The volatility that I promised definitely been here, and even though we're still at highs, relatively speaking, beautiful ranges. So as always, I will update any of these details and more on the Skype chat. Trade well.